A very warm welcome to all of you. I am Honey from Cygnet's marketing team, your host for today's session, and I truly appreciate your time here. I can assure you it's going to be a great session. Today we are hosting a webinar on From Data to Decisioning, Power of GST Bank Statement Analysis, Financial Statement, Invoice, and ITR data. In this session, we will cover how fragmented financial data often slows down credit decisioning and how Cygnet Finalyze helps lenders unify this data into real-time AI-powered 360-degree risk profiles enabling faster, smarter, and regulator-ready decisions. I am delighted to introduce our speaker for today, Mr. Rahul Bhora, Vice President Fintech at Cygnet.Fun. Rahul is a techno-functional expert in fintech and tech stack with deep expertise in financial data integration, automation, and analytics. He has been closely involved in India's DEPA framework and is an active contributor to the account aggregator ecosystem. So before we start, just a quick reminder, if you have any questions, you can drop in the Q&A box. We will address them in the end of the session. And with that, let's get started. Over to you, Rahul.
Yeah, thanks, Anil. Welcome, everyone. As Hani mentioned, today's session is about how lenders like you can move from fragmented data and reactive risk checks to a unified, real-time, I would say, AI-powered credit decisioning process. I will walk you through the challenges which the lenders are currently facing, and especially the mid-size NBFCs, and how our platform can solve them and show you a live consolidated report at the end, if time permits. Yes, it can be. Yeah, thanks. Anil. So if you see, there is a lending bottleneck. We can see why do the lending decision still takes time, uh, still takes a days, not a minute. Because obviously the data is fragmented. We have one set of data which is banking data. When we talk about the SME, MSME, the source of data currently is the PDF copies only if they are private limited or the partnership firm. Even though we have the account aggregator framework available, but still the data set for the private limited or the partnership firms are still not available. So the one source which the lenders can consume is the PDF copies of the bank statement. Similar case with the GST data also. The GST is also fragmented. When I say fragmented, it's one portal where the data from the GST can be available, even though the account aggregator has that linkage, but still not the entire set of GST data is part of that particular ecosystem. So the source available for that is the GST, from where the consent or the OTP-based mechanism can be taken care to get the data from the GST. Same goes with the ITR, which is also the historical data. ITR requires to be downloaded from the income tax portal. And then since it is a unstructured document, it requires some parsing logic to derive the insights from the ITR copy. And same goes with the financial statement, also audited, non-audited. So if you see, all of these documents require some manual, the analyst needs to do the manual data analysis, which may result to some kind of error. It can lead to a error and delay also, because these set of documents are coming from a different data sources. Risk is often discovered, I would say, default or compliance issue. All of these surface after exposure. It's not that at that moment what is the business, even though it's not new that lenders are not doing this, but can that be consumed or happen through the AI ecosystem faster? That's the main concept which we are right now focusing on. And obviously we need to also be compliant in terms of the audit regulatory documentations. That takes this, I would say, disproportionate time. That's the core of any NBFC or the bank or mid-sized bank. They can't deny this particular part. So that's where we see that's a bottleneck, and we wanted to. I would not say the 100% breaking that bottleneck, but at least some part of that can be resolved. Uh, can you go to the next slide? Yeah, thanks. So if you see, this is just kind of a proof. This is what an underwriter ultimately see from our platform. It's one decision file, all the consolidated data from the GST, ITR bank, financial statement is part of that. Along with the, I would say, the decisions also. This is currently being taken care through some kind of an, we call it as a CAM report or CMA report. We can call it anything. Uh, but that's more, I would say, the system-driven traditional model which with the lenders are currently consuming. Uh, Here we are trying to solve that part where we don't need to toggle between the multiple reports, evaluating that uh, one by one, taking the decision from one by one, and then doing the final decisions. Uh, anyway, I'll show you the final report at the end, which will cover a lot of information. We can move to the specific data set analysis and all what sort of data can be available as a part of the different source of data, where the GST, bank, ITR, financial statement as part of that. Yep. So can you move to the next slide? Yeah. So if you see, we all know that GST has two set of data. One is the publicly available data. We call it as a non-consent driven. You have the GST number or the PAN number of that entity. You have the PAN number of the entity, and based on that PAN number, they might be registered in multiple states. If they are registered in multiple states, then the multiple GST numbers are available. As a part of the GST ecosystem, the GST filing has to be done at a state level, which is one of the compliance signals for the lender. So for that particular part, we have created a non-consent based compliance score, which is a GRC score, GST written compliance score. It gives you the indication based on the filing trend of that entity, how they are filing, whether they are filing in time or not. Uh, Additionally, the turnover trend also, based on the turnover slab and all, we can also define uh, how they are performing. But often this is overlooked, I would say. Uh, so they always see, okay, the out of 12 returns or 6 returns, the entity has filed 5 returns, but they don't go in the detail whether those returns which has been filed are also delayed or not. So we are just giving that an assurance from this score point of view that even though the entity has filed their return, they might be delayed in filing their GST return, and which is one of a part where you can consume it for a different uh, aspects. Like if it is an NTC customer, you will not have any kind of a bureau information. Uh, if it is a new to the business, I would say they are newly registered entity, and you will not have any larger banking exposure. There is no bureau exposure, but still you wanted to evaluate from an intent point of view that whether is there any compliance is being followed by them or not. That's the key part which can be used. So that's where this GRC score or the GST written filing score is one of a part which can be consumed. Uh, can you move to the next slide? Yeah. Now comes we have the with the consented data, which is the larger set of data from the GST. Based on that, we can get a lot of different insights from the GST data. Couple of them we have already highlighted on the screen, where you can identify their sales distribution at the different geographies. Uh, you can go for year on year trend also. Last year, what was their sales? This year, what is the sales? How their customers are, customer performance are improving. How many orders they are getting on a monthly basis, on a quarterly basis, or on annual basis. So it's kind of a rolling period analysis you can do based on the GST data. Obviously, it is a historical trend, but it's a it's a latest historical. It is not like ITR or the financial statement, which is always being filed on an 18-month or 20-month of timeline and all. And you don't need to get the obviously we know. GST is core business aspects, which is giving you more insights, their customer information, supplier information. If they are doing any kind of a round tripping between their related parties, it will be able to identify those also. Uh, I would not say the use cases which is listed on that this can be used only in these. But yeah, there are banks, there are NBFCs who are using it, but it is very from I would say it is very at a base level they are consuming. They are not going in detail that even if you properly evaluate the GST data, you can still be able to identify the risk with that particular business. And once you relate that GST data with the banking data, then you will also find more cash flow related information, how their cash flow is happening and what is there any concerns or is there any issue with that particular entity or not. So that's all. I mean, that's where we can go in that and all. Even GST is also being consumed in the insurance underwriting part also, where if we wanted to do the real time, I would say, real time underwriting of an entity, just to see the exposure from that side, how their business are performing, and then do some kind of an insurance uh, activity and all. So that's where the core of that GST information is. Uh, can you go to the next slide? Yeah. This is kind of a, I mean, as I mentioned, the GST has two set of data, but getting the GST data is always a different mode of options are available. We can get from the consented data through the OTP model. We have the account aggregator. Uh, we also have seen that couple of NBFCs are only getting the GSTR 3B file, which includes the liability and the input tax credit related information. So that's the document PDF options they are getting. So we provide the all the three options in the platform where whatever mode of the options you are consuming, you can get the analysis based on the GST informations, be it an OTP based mechanism through the GSP or through the account aggregator or through upload of the options. Obviously, all of these three will have a different set of reports, different set of analysis based on how the data is part of that particular ecosystem. Uh, but yeah, this helps to the NBFCs that even though they are not consuming fully the entire ecosystem of GST, whatever right now they are consuming, whatever their as is process is, we can still plug this particular platform and get this. So that's where this, I mean, the GST BI report, which is available on the screen, can be can be. I mean, it's just a glimpse of that, but we are just showing you that this is how this report looks like and can be consumed. If you go to the next slide, then we also have a sale bank statement related data transactions and all. So if you see, bank statement also carries the cash flow based information. But bank statement, I would say the lenders are using it very prominently. There are uh, multiple options are available with the lenders where they can do the analysis of the banking data, uh, where the repayment disciplines, if I wanted to calculate the 4 year EMI bounces, average balance, there are multiple stress signals are available which the lenders are currently consuming. Uh, and the same things we are also getting into the in our system that even if you have the PDF, which is still we can say that most of the lenders are relying on the PDF only, specifically from a SME MSME point of view. We help them to do the analysis of any sort of documents, be it a scanned document or the PDF document. Uh, it's the model which we have implemented is template agnostic, so you can get the analysis from any kind of documents which you are getting from your from the applicant. And the biggest I would say the biggest requirement which we see from the lender is the categorization of the transactions so that the actual core can be identified. Otherwise, the fixed obligation to income ratio is always a challenge for the lender if they are doing manually to assess. We help them to get that because that's where the actual I mean business income and the big business revenue can be identified. That Can you go to the next slide? Next. Yeah, these are a couple of reporting matrices, which is part of our banking analysis. We identify the EMIs, we provide the average monthly or quarterly balance, if it is a sell ride or the individual income bands, obviously consistency in the transactions. We also do the fraud check of the document, which is also part of a risk analysis, which we do based on the document which is uploaded into the system. We also do the reconciliation of the transactions, whether the debit side and the credit side at each and every stage at a daily basis, whether it is matching or not with the opening and the closing balance. Then we also do the temper check of the document based on different font styles being used at the different cases, or if any transaction has been infused by the applicant manually to the document before submitting to the bank. So all of these are part of, our system. We can go to the next slide. Next is the ITR. Obviously, ITR, we know it is available from the income tax, obviously banks are currently also using this, where they are calculating the different ratios from the income tax return. We are also consuming the same. Obviously, it is a critical to verify the income, even the tax discipline also, which validates the declared profit, their leverage levels, and their tax consistency. Uh, we fetch we can fetch this directly from the income tax portal also, but to make it simple for the lender, where they are doing it in a hybrid mode, that they are collecting the document, which is RM driven process is currently happening. We have a upload option also, so where you can upload and you can do the analysis. Same goes with the financial statement also. Uh, can you go to the next slide? Yeah. So obviously we all know financial statement, which is audited, non-audited balance sheet, P&L information are part. So this helps validate liquidity, profitability, and the solvency. All of these three key parameters, which most of the lenders are using. We derive the multiple ratios from that, but the current ratio, debt to equity ratio, any interest coverage reveal whether the business can sustain new credit or not. So all of these data is part of that, and we paired with GST and banking data to see whether reported performance matches with the actual flows or not. So uh, that's where the historical information, if you are taking historical financial statement as well as the historical GST data of, let's say, 2 year or 3 year, then this is one of a key part which we help you to derive that. Uh, can you go to the next slide? Yeah, these are a couple of key reporting matrices which I already covered. Uh, all of these are part of the balance sheet P&L, the ratios only, which covers, I would say, 30 to 35 different type of ratios we provide, which can be consumed by the lender in their, as a part of the underwriting process. Yeah, go to the next slide. Yeah. So here, if you see, there is one of a lending offering which is going into the market is the invoice financing, supply chain, or the bill discounting, we can call it in any name. Uh, if you see, one of the key aspects to identify the risk, whether the document or the detail which is provided by the applicant or the borrower to the lender for financing as a part of the invoices are authentic or not. That's where we have seen that a lot of financiers who are into the supply chain financing has started doing this, uh, be it in the form of Excel data, or they are taking the document in the form of PDF into their system. Multiple platforms are available. who provides the supply chain financing opportunity to the uh, different corporates in a distributor financing, buyer financing, supplier financing. You can say sales financing or purchase financing, any kind of a name. You can call it any name. So we provide the risk based on the transactions provided to the lender also. We do if it is a document, then we validate that document, whether the document is correct or not. What is the supplier? If it is under the e-invoice purview, then the document should have a e-invoice detail with the QR code generated from the government portal. We also do the verification whether the same data which the invoice carries is also part of that QR code or not. Then there is an extension to that. We also validate whether the same data is available in the e-legal generation, whether the e-invoice which they generated is also filed by the entity or not. So there are a lot of checks which we provide, so that the lenders are assured that the financing on which they are doing is authentic and it is also being validated from a exact source where they have reported it. So that's where this is also one of our risk indicators, which is mostly on the invoices. By looking just at the invoices, if you are doing the invoice financing, you can simply uh, make this particular thing quicker. And if you see all of the sources and the analysis which we are doing, obviously comes under, I would say, obviously a boundary check is also being implemented. Like if it is an account aggregator, we know that account aggregator is just a data realm. There is no analytics. We are also following the DPDP line process, where if consent is being taken, then consent is specific for a purpose. The purpose limitations are also being maintained. Retention policy, retention control is also part of that. Purging policy is part of that. Uh, so the lenders who are taking the data, they will, I mean, uh, they they will get all of those regulatory points aligned into that, as well as the applicant who is providing this information will also be rest assured that my data is not going to be misused. And additionally, we are also aligning to the RBI, I would say, the guidelines or the guardrails which they have already being asked to the lender, where it has to be the full logs and the audit trail needs to be maintained. So we are following that particular part. There is no regulatory violation. Uh, so that's where this entire things are being taken care through the platform. Can you go to the next slide? Yeah, this I have covered. Can go to the next slide. Yeah, so there are key success stories. Before I tell you about a couple of our existing customer success stories and all. Uh, See, every lender, every financier will have some policy setup and all. Uh, we are trying to provide a proper, I would say, the explainable input to the financer based on their policy. So, considering if they have a rule like EMI bouncers is, if it is greater than some number, then you can reject the application. Obviously, lenders are using multiple rule engine for that. We are also giving them a kind of I would say, some inputs or the insights or the inference, where if we wanted to override this also, or there is a condition that this still the EMI has been bounced, but still if we wanted to consider it further for some specific scenario, we also consider that as a part of our response. We give them an option where they can override this rule, and why they are overriding by linking it with the other set of data. So it's kind of a cross inferencing information, which helps them to, okay, I have a rule which says that the EMI bounce should not be greater than 3. And if it is greater than 3, we should reject the application. But we also try to map this with the different set. Okay, even though there is EMI bounce, but you can still consider this application for that other part. So it's not like a kind of a black box. It is still available for them, and the reasons. And if they continue, they can log the reason and all by looking at the different set of data. So now, if you see, this is one of a, I would say one of a public sector bank where we are doing this. We have implemented this solution. Obviously, all we can say that's a historical data dependency, not ready to consume this data, going with a traditional thought process only, that we will go with a traditional mindset only. We don't want to relying on this. But the reporting or the format or the as per the bank policy, the credit manager has to prepare one report, which they sometimes go for a go based on a gut feeling and all by looking at the data, historical data and all. We gave them this application, this platform with the various insights coming from a GST bank in the ITR. Uh, they were able to do the real-time monitoring also on that, and which gives them a benefit to go for a 90% of the, uh, their entire effectiveness of that particular things have moved, increased to the 90% of that overall trend. Similarly, if you see on the screen, there's a one more private sector bank. They also wanted to automate their credit assessment part, where they were also using all the different set of data, but the GST component was missing because they wanted to make sure that even if they are consume the GST, they wanted to use it at length. I mean, it's not like I use only 2, 3 parameters. Okay, GST is active. They are filing their GST return in time. They wanted to go in detail, in depth of that. And by looking at, when I say in depth, they wanted to see the exact risk which is there in that particular business. Not like, okay, turnover is okay, they are growing into the business. Not like that. They wanted to go in depth for that. So that's where this platform helps them to bring their existing accuracy process uh, to increase from 85 to 90%. Without that, they were doing. I mean, that's because it's a very largest private bank. But by looking at this, they identified more information from the GST, and they were able to save some of their time in terms of uh, uh, risk. Defining the risk based on different set of data, which helps them to do the decision making. Can you go to the next slide? Yeah. Okay. So this is also one of a public sector bank. I mean, obviously, they wanted to go for all the available mechanisms where the data can come from, because it's an SCP, or I would say the online journey. You, when the applicant is part of that journey, you don't want to lose that. You want to give them all the options. You wanted to do the analysis. Uh, you don't want to remove them from the ecosystem. That if I don't want to give GST, no worries, you can give the banking data. You don't want to give the banking data, you can give us the financial statement likewise. So it's kind of a model based on, obviously, that's where they wanted to move, that couple of things will be mandatory for the customer to provide, but couple of them can be non-mandatory. uh, so that's where the OCR technology, extraction of the data from different set of documents, doing the analysis on top of that, like 26 years salary slip. If it is a retail journey, if it is a corporate journey, then we would like to go for a different set of data, stock statements. So a lot of information they wanted to collect. They do not want to make, I mean, ask the user to give some kind of information as a mandatory. Couple of them were mandatory, but they also gave them an option that if you don't have this data ready, you can even provide this information, additional information of that part. So that's where this entire things from the platform got implemented, and still in the implementation phase. Couple of the journeys are already live, and couple of them are in the pipeline where they're specific to these. risk insights will be consumed. Yeah, we can go to the next slide. Thanks. Uh, I think we can show you the one financial report, one report which I gave the teaser to all the members. If you go and see that report, it covers a lot of information. Mani, are you showing or should I?
Is my screen visible, Rahul?
No, I can't see. Yeah, now it's visible. Thanks.
Yeah.
Yeah, this is one of a sample report which is generated from our application. You can see it's just obviously we have uh, consumed all the set of data and giving one consolidated data report to the financer so that they can take a decision. Obviously, for that we require all the four set of data. If you go down, scroll down. Yeah, so you can see that there's an executive summary is getting generated, which gives you the strength, weakness, and this system decision as well as the recommendation. So strengths are based on the GST data. The compliance score was 95. There were no filing delays in I would say, last financial year. Income is stable. They are consistent in ITR filing also. So which is also two of the strength which is coming from the GST and the banking. But there is a weakness which has been identified based on the sorry, GST and the ITR, and there is a weakness which is identified from the GST and the sorry, from the bank statement and the from the GST bank and the financial statement. So first, if you see, there is a higher buyer concentration, which is 93% of the dependency. So with there is a 93% of the dependency on the top three buyers. Fix if you see the FOIR, which is 72%, three EMI has been bounced in 6 months. Current ratio is 0.9% as a liquidity stress. So the system is giving a decision which is conditional approval. You can go ahead with that. And the recommendation is if this entity diversify the buyers or reduce the FOIR, or maybe it can improve the liquidity buffer. Now, based on this executive summary, how it has been generated, if you go down to the each and every sections, it has been defined from that section. Obviously, we have individual report, which is too lengthy for everyone to view and all. But if you see the GST, which gives 95%, which is for, I mean, as per us, it's excellent. 95% returns in the last 12 months has been filed properly. Uh, Monthly turnover is one of a parameter, then buyer concentration. There are multiple different parameters also. But for this particular customer, these were the parameters which was considered. And observation is also based on the GST that they are strong filing discipline, heavy reliance on top three counterparty. And implications, if you see, stable compliance reduces regulatory risk and buyer concentration exposure and credit risk. So that's an implication which we are giving. Same goes with the bank statement analysis also. The FOIR is 72%, which is high stress. Uh, then average, I mean, EMI bounces from the last 6 months. There were three. Average monthly balance is also 12.5 lakh. Based on the turnover of the business and based on the average monthly balance, it is changed. Uh, and cash flow pattern, obviously, it's a seasonal spikes. There's a moderate stability which is coming from the model. Observation is also being mentioned. Same goes with the ITR also. If you go to the ITR, uh, there is a net profit margin which is 6%, net to EBITDA. So don't go to the values and all. Just refer the attributes which is being identified for this particular entity. So we have a lot of different attributes, but when all of these four set of data set is getting consumed, the model gives the attributes as per the choice, as per the applicability, and then the observation and the implication is getting derived. And at last, we also provide the system decision. If you go down, there is a system decision which is also being part, and the key risk and the conditions where the lender can take it further if they want to. So this is how this report is getting generated from the system and is getting consumed. So that's all, Honey, from my side. Uh,
Yes, Rahul. So we have few questions. Let me read out.
yeah, sure.
Okay, so the first question is how does Finalyze ensure accuracy while pulling and consolidating data from multiple sources like GST, bank statements, and ITRs?
See, accuracy of data collection, first of all, we do not, I mean, Finalize is not rely on, we are not only relying on manual upload, but we are also relying on the API integration from the source which is getting consumed, like GST, is the authentic source where we have our own GSP which is integrated. Same goes with if it is an existing to bank customer, if bank is integrating, then ETB customer can consume their own, I mean, they can provide their own customer data through their core, from their core banking through the API. And same goes with if it is coming through the account aggregator, then it can be consumed. So I would say the accuracy starts from the source. Obviously, whenever there is a PDF upload is happening, we consider the person who is uploading has generated from the authentic source, which is the I mean net banking or the mobile banking application. From there, they have downloaded the bank statement. But we also check because we know which. I mean, we have all the metadata available based on what sort of bank, what is the I mean the tool or the solution which the banks are using for generating. So we have the authentic information. Uh, And on top of that, we also do I mean, uh, various validation checks we have into the system. That's how we ensure the underwriters uh, get the I mean, authentic information with an accuracy because it's more on the consolidation of data and based on that they are taking the decision.
Okay. So our next question is how customizable are the risk models? Can lenders set their own policy rules and scoring parameters?
Yes, yes, yes. It's completely, I mean, configurable. We don't have our own policy. We always go with the bank on policy only. So they can set the rules. The model can be configured in that way, which consumes the policy rules as well as then it goes to I would say, analytical model which gives the observation and the implications with a decision. So yes, I would say the bank can provide their policy and we can configure. It's completely configurable.
Okay. So the next question is what measurable impact have clients seen in turnaround time for loan approvals after adopting Finalize?
See, banks. I mean, if I talk about the large banks, they are already consuming this set of data from many years. Only thing is they also know the variables. They also know when they do the semi loan approval, what is the checks they need to do because ultimately it's a risk to them and all. So the analysis, if I talk about, is anyway they were using. Only thing is we are trying to keep it in a very the in a very I would say short-term time that instead of taking 3-4 days to underwrite, we are keeping and we are trying to keep it into the 4-5 hours. That's where the key strength we are trying to build. Where uh, not go for a gut feel, understand the data, derive the inferences from that, and then create the observation, the implication. So the even the credit managers trying to see some data, but the model will not let you go with your internal observation. It will also based on the data correlation and all. It will help you to go beyond what you are thinking. So I would say the real ROI is faster. It's more about time to cash without compromising on risk. So the measurable impact on the TAT is that.
Okay, so last question. What is the typical implementation timeline for a mid-sized bank or NBFC?
Uh, See, we if it is a platform driven they wanted to do, they can do it in a week or weekday. It's not in a 1 week time. But we always see that they go for an online journey. They also have LOS. They have built the digital journey. If they wanted to integrate there, we expose the API. So I would say if it is just in case of phase one, phase two, phase three kind of a model, then it takes sometimes 8 to 10 weeks. But straightforward, if it's a mid-size bank or NBFC, they can even reduce that cycle to 4 or 5 weeks also, depend on how their implementation partner is, who is going to consume this API and all. And if it is a large bank, obviously they take time. Uh, they sometimes take 2 months also, 2 to 3 months also. But as a part of the application, uh, I mean, the platform is modular, it's an API first, so you don't need to wait for a year-long period. Even you can start in hybrid mode also that you go with if the lender are already using RM driven process, they can start consuming the platform and parallelly they can start integrating in the journey.
Okay, so I believe there are no more questions. With that, we will end our session. Thank you so much, Rahul, for sharing such valuable insights,
Thanks,
and a big
thanks.
thanks to all our attendees for joining us today. We hope this session gave you a clearer perspective on how AI-driven financial data integration can transform credit decisioning. The session recording will be shared with you shortly. For any queries, feel free to reach out to us at kesha.shah@cygnet.1.com. And don't forget to follow us on LinkedIn. Thanks once again.
Thank you, thank you, thanks.